Good evening, everyone. This is Srikanth Rajan, and welcome back to the Market Pulse video that we do every Sunday at 7 p.m. And this is where we discuss what happened in the market last week and what could be expected next week. So, I just want to first of all, wish all of you a happy new year, or I would say this is to the Tamil New Year as well as the people in Kerala who celebrate Vishu today. Very happy Vishu today. So, well, of course, I also celebrated Vishu with my family today, and then back to the scene here discussing about the markets. So, first thing first, of course, the most important concern that I think all of us will be worrying about is the Iran and Israel tension. So, well, there has been the attack already, and it looks like it is settled for now, and doesn't look like it is going to escalate much, because one very important thing that need to look at is the airspace which was closed by many countries have actually reopened now. That is one good news. And second thing, when Iran and Israel is getting affected, one of the most important concern for India would be the crude oil prices going up. So today the Saudi Arabian market is actually open, and that actually kinds of shows that their markets have actually not gone up today. So that means probably crude oil prices, because if crude oil prices were supposed to go up, the Saudi Arabian market would have gone up. And today, because it's a Sunday, is a working day for them, the markets are open, and that kind of shows that yes, it may not affect crude oil prices much at this point of time. So that can be a reassurance for us, for India, because as a country in India, crude oil prices makes a big difference in the market, and that is something that needs a huge focus on. So, with that, I would say the Iran and Israel war concern may not be a big issue for now, but then, of course, things can change. But then, this is my view as of now. Apart from that, if you see on Friday, the US markets have actually fallen. So US markets on Thursday went up, and after that again on Friday it has fallen. But that was more of because of the corporate results, which are not great. But then I would say overall it was a selling pressure in the banking stocks there, and I would say overall the markets have taken a break in the US. So naturally the markets are expected to open a gap down tomorrow in India. But then we do have some good news as well. So what is the good news? So the first good news that we can actually think about right now is, well, that the TCS results have come on Friday after the markets closed. The TCS results have come, and TCS results are actually better than expected. So that should actually give a positive, news to this market at this point of time, and because of which I would say IT sector probably see, not that the results were great, not that they're going to see a great rally upwards, but then the good thing is at least it was not worse as expected. So probably we could see some short covering in the IT sector, and that could probably support the market even if the market opens a gap down tomorrow. So that could be one sector to be focused on right now. And this week we have Infosys and HDFC Bank results coming. So that would be two stocks in focus for now. So as of now, if you see, HDFC Bank is trying to recover from its low in this 52-week low, which it was in. From there, it has actually recovered well. And of course, as the results are coming soon, and there's also news that the deposits have actually increased, so which could be positive for the market at this point of time. But overall, globally, there is a uncertainty that's happening, and because of this uncertainty in the global geopolitical issues, the markets are kind of struggling to find some direction. So we might see some correction on a short-term basis, but my long-term view continues to be bullish on the Indian market at this point of time. So with that, on that basis, if we see a decent correction, I would actually look at adding few fund into the markets at this point of time. Along with that, our investment in gold is doing really well, and in such times of uncertainty is when gold actually performs better. So in fact, in the last 2 years, our gold investment in SGB has actually done really well, and I'm expecting it to probably continue to do well in the still upcoming couple of months. So that means I don't think it is time to actually book profit in gold at this point of time. So, well, again, it depends on your view, why you're investing. If your investment view is for a short term, then yes, you can book out profit in gold and come out. But then, if you're a long term investor, you really don't have to continue, book your profit, but just stay invested, because many a times gold actually works inversely to the equity market. So, whenever an equity market falls, gold tends to rise, and if that is the case, that could be a good opportunity for us to liquidate some gold at that point of time and then enter the market. But then, as for me, until I see a decent correction in the market, I don't see a reason why I should sell my gold, and that's exactly what I'm going to plan with my investment. So, in fact, some of you have actually complained of the audio issue with the podcast. I think, is it? I just wanted to understand: is it something which is common to everyone, or is it just one or two people? So, because I tried playing it on my device and I feel the sound is okay. So that's something probably I want some suggestions from feedback from all of you so that we can think on working on that. In fact, we have tried multiple things. So let us see. I would like to feedback on this video whether the sound is okay with that. So that is something that I had to share apart from the markets. So well, this week again focus would be on results. So results season, which we've discussed, that markets can be volatile. Naturally, markets can be volatile based on the results, and that too when two heavyweights are coming out with the results this week, markets can continue to be volatile. So watch out for HDFC Bank. HDFC Bank is in fact coming after the Indian markets close this week. The effect of that can be seen only the next week. But then Infosys result is coming before that. So IT result, however, has been kind of set by the DCS. So Infosys, unless it makes a big difference, may not be really affecting the market. But then, of course, focus majorly would be on the banking sector because HDFC Bank will set and pave the path for the banking sector in India. So that would be closely watched. So apart from this, markets are kind of looking okay. So however, markets are looking weak because it has actually come close to all-time high, brand new all-time high. In fact, close to almost 23. When it is getting closer, inching closer to 23,000. So naturally, markets have to take a break. With all these geopolitical tensions, there might be people who are already sitting with great returns in the market who might think of booking some profit. So that may be a short-term view for them, but I, as a long-term investor, I'm not planning to book any profit at this point of time, and I would just plan to invest further based on market corrections. So that is the view for now on the market. Let's see how things go, and based on that, I will of course update you in the podcast here. So apart from that, if you have any questions, do put it in the comment section. Of course, we can answer them in the upcoming podcast. And that's it for now. This is Srikanth Rajan signing off until we catch up with more details tomorrow morning. Goodbye.